So what the heck happened yesterday to these things, and could it continue today? So we start the day with the one of the doves on the Federal Reserve. It's Goolsbee. He's actually from Chicago. He sits on the Federal Reserve. He's coming in now and saying there's no reason to cut rates. Now, when you have Goolsbee saying we shouldn't cut rates, I don't think the Fed's going to be cutting rates anytime soon. So what happened yesterday to make mortgage rates drop below 5.99? And this triggered, if you're in our RateWatch 2.1 alert system, this thing triggered 157 clients yesterday. So we're going to talk about these things today because if you're watching this, you're either a homeowner, home buyer, heck, hopefully you're a realtor or loan officer trying to understand these things. Because my goal each day is to help you understand what the heck's going on with those and the whys behind it. And the reason why I do this, I'm actually a licensed mortgage loan officer. And if you need some help with a mortgage, I'd love to help you. I'll give you all my information at the end of this video. Let's get to these things. So yesterday, mortgage rates, they dropped below 5.99. This is the psychological lever everybody's waiting for. And I was actually called by homes.com yesterday, and I did an interview. They call me like every month just to get a beat on what's going on in the market. We're going to get to that in a second. But over here, here's what we're seeing this morning. Now, I'm going to talk about what happened yesterday in a second. But Goolsbee's coming out and he's saying, okay, there's no reason for us to cut unless inflation really gets to 2%, because we can't have inflation rolling every year 3%, 3%, 3%, because that'll really put costs way up there. So that's what he's saying this morning. He's saying we're going to just wait for that inflation number to come down. But here's what we go over to here. Here's what the Federal Reserve monitors. We're getting some of these this week. We got inflation that came out last week. It's a little bit higher. It's almost 3%. They want this at 2%. But we had a peak at the jobs report this morning. It was ADP. Now, I was watching Fox News or Fox Business, CNBC, and the other channels. I got TVs all over the place. And they went right past it. So did you realize ADP came out with payroll this morning? So let's get over there real quick. ADP payroll numbers came in. Their last reading, this was 10. It was upgraded to 11. So then they said there's 12.8 thousand people that got jobs over the past week. So that is a good number. But we're really not going to pay attention to that. I don't think the markets are either. They're going to wait for tomorrow or the next day, Thursday. I'm sorry. Thursday, we're going to get initial jobless claims and continued claims. So that's going to give us the jobs reading. But the Federal Reserve, they're more, they're kind of pushing now that maybe it's the inflation they're worried about the most. It changes on a daily basis. So the good news is on that is we got this coming out this week. It's the PPI. That's producer inflation. Now, this is going to roll over to consumer inflation. That's going to roll over to the PCE, and then it's going to roll over to what the inflation numbers are going to look like. But here's what we're seeing today. The PPI is supposed to go down. So it was last reading was 0.5. It's supposed to go down to 0.3. Now, what this is producer inflation. So think of it. Oil was at $60 a barrel about a month or two ago. Now it's at 66, 67. That's going to push this up because that's a big piece of this and other components. So I'm kind of contrarian to this. I don't think this number is going to go down. I hope it does, but don't be shocked if these numbers start to come up a little bit. So inflation, we're still going to see if that's in check. The job market's looking okay, but let's get over to this. What's my thoughts on this? So yesterday, homes.com, they called me, and here, I'll show it to you. It's right up through here. And they called me and said, okay, what's this 6%? How did rates really get below 5.99? What's this tariff thing have to do with things? And what's 5.99 really mean? And I said, it's a psychological thing. So if you're out there, most people don't even know their interest rate. Believe it or not, most people don't know their mortgage rate. So, if you're meeting with your friend today for lunch or you see some family members tonight, ask them, what rate do you have? They can probably know what the payment they're paying. So let me give you some tools that I can help homeowners at. But we had 157 of these trigger last night because rates went to 5.99. So let me talk to this about real quick. So if you're a homeowner, here's what I need you to do. We created that tool up there. It's RateWatch 2.1 AI. It's not AI. I follow this. If you're a homeowner, put your mortgage information in there. Then let me know what interest rate you'd be interested in refinancing and how much of a monthly savings you would like. Put both of those in up there. If either one of them trigger, I'll call you. I'll text you, email you. I don't sell the data. I'm going to call you guys. It's going to be hard in the next 2 days because we have 157 of these triggers. So let's get back over to here. Where rate's going to go? Here's where the bond market is today. So if you look over the last 6 months, the bond market's been up a little bit. But let's look at today. All I really need you guys to know is the number up there. If it's red, that means mortgage rates are going up. Okay, red is bad, green is good. If you look over my head, you're going to see Ginnie Mae is flat. So These are government bonds. This is like FHA, USDA, and VA. And over there, those are just normal conventional loans. So a little bit of mixed charts today, but again, green is, and this green at 0 is nothing, and red is bad. So red means mortgage rates are going up. Green means mortgage rates are going down. So let's go over to the stock market, see how it's faring for today. And this was kind of just terrible yesterday. And I came out yesterday morning and I did a live event because of this. I came out and said, okay, the bond market's doing nothing today because of the tariff thing from Friday, the rollover to Monday. And then I said the stock market wasn't doing anything either. And that was in the morning. By the end of the day, it was down 800 points. So I jumped in and said, okay, folks, calm down. Calm down. Let's look at all the fundamentals. And we did. Look what's happening today. Now you got green all the way across the board. So if you sold into that negative rally yesterday, please don't buy back again today because most people are selling low and buying high, exactly what you're not supposed to do. So be careful of that. But right through here, we have all the indices up. We got oil at $67 a barrel. That's terrible because it's not going to help inflation. And then we have also the 10-year Treasury. It's up just a tick, but it's only at 4.04. That was at 3.99 the other day, but that was like 4.25 about 2-3 weeks ago. So we're going in a good direction there. Oil's not going in a good direction, but we'll see how the U.S.-Iranian situation pans out because don't be surprised if once it's worked out that drops all the way back to maybe $60 a barrel if something's worked out. If not, it could maybe go to $70 a barrel. So then let's get to the last piece of the puzzle. Here's what I want you guys to understand. Go to earningshub.com. All I want you to do is look at this. These are companies that are coming out with earnings over the next few weeks. This is a majority of the S&P 500. So all I want you to do is just go to this channel and click along the top. The cool thing is you can actually listen into the earnings reports. Like right now you can go into, I don't know what DOCN is, but if you click it, you can actually listen live to their earnings report. I do it sometimes. It's pretty cool. So check it out if you really want to understand these things. But all you have to do is look over to the side and you can start seeing, what the company's earnings are and so forth. It's a pretty good mix of things right now. You see right through here, not a lot of people came out with earnings today, but let's see yesterday. We have 4 out of 6 that did better than they expected and 2 did worse. So check out earningshub.com. At least it gives you a beat on what corporation earnings are doing. So if you see earnings starting to really go robust, that's probably a good sign the market's going to go up. If you're starting to see earnings deteriorate from the tariffs, maybe people pulling back on their spending, that's when you're seeing deterioration there. So if the stock market earnings starts to deplete, you're going to have the stock market prices go down, and then that's going to have a snowball effect. So be careful there. So last but not least, let's get over what's the Federal Reserve going to do in 22 days? Yes, in 3 weeks, the Federal Reserve is going to come out and they're going to do something. The odds are they're not going to do anything because if you go back to our initial beginning of this, Federal Reserve Chairman Goolsbee, he come in and says, we're not going to cut rates until inflation really gets closer, much closer to 3%. So the Fed's going to hold off. The tariff stuff, relax. They're going to be, and now I think they're back to refunds. Is how the people are going to get refunds. It'll all get worked out, folks. Trust me. Remember last year we had the banking scare. You remember just last year also we had the tariff scare. Remember last year we had okay, we're still alive today. Okay, so everything's okay. All right, so let's conclude this thing. Where are rates going to go today? We'll go back to the bond market. It is flat as a pancake. The economic news out today was only ADP, and it basically just skated right across the news. Even CNBC didn't highlight it. And there's really nothing out there today. Really nothing out there tomorrow. Thursday is when we're going to get a beat on jobs. And then Friday, we're going to get that inflationary numbers from the manufacturers. So Thursday and Friday is going to be a huge day in the markets. So that's what we're going to watch for. So my expectations for today is rates are going to be flat. I'm saying my forecast for the year or for the quarter is 5.875 to 6.25. We keep going down like I told you guys. But don't miss out because a tweet, just an interview can send these things way up, but there's really nothing to bring those down. So if you're sitting waiting for 4% or 3% rates, don't think you're going to see that, hopefully in my lifetime, but maybe you will. But mortgage rates, they're pretty much going to be stable right through here. So if you're a homeowner, check out and see if you can refinance. If you're a home buyer, reach out to me because I'm licensed in all 50 states as well as Puerto Rico. My slogan here is one application, one credit pool. I'm going to compare your loan to over 30 different lenders. So you can even use my experience of 35 years to help you get a mortgage. But you realize I'm also set up with almost 40 other lenders. So here's what we do. I'll get you approved, and then we're going to start searching. What are you looking for? You're looking for a low rate and low fees. That's what I'm looking for you as well. So my bank set us up with almost 40 other lenders. So when you call in, you don't have to call that bank and that lender and that lender, have all your credit pooled and credit ruined. We can do it with one application, one credit pool, and you can use me with over 35 years of experience, and I'm all over the country, folks. So join me each day where I talk about this stuff and more. I also have live events each week as well. So join me each day. Subscribe over there if you're a homeowner, home buyer, realtor, loan officer, trying to understand these things a little bit more. Well, that's my goal, to help you out as well as help you get a mortgage to refinance or buy. So thanks for watching, folks. I'll be back tomorrow at the opening bell to let you know what happens to these and specifically the whys behind it. So check out some of the mortgage calculators I have down there below, folks. They're free. Just plug in code DAN, all capital. You can get every one of those calculators for free. So thank you for visiting me, and I'll see you tomorrow. Be safe. Take care. Bye-bye.